Here on the Colour of Country Life, where we've got a substitution. We have regularly spoken with Stephen Reid from Michell Wool for some time, but very ably represented this week by Andrew Partridge from Michell Wool. How are you, Andrew?
G'day, how you doing, Ricky?
Very good, thank you. Now, let's just look at, first of all, just how things have travelled in the wool market over this last week generally.
Yeah, interesting week again, Ricky. It's been sort of challenged a bit by the rising currency, but overall the market's actually going on okay. We'll go through the numbers shortly and just sort of elaborate it further, but certainly it's not a bad week, only sort of minor sort of single-digit changes. So looking at the AOX EMI for the week, down to 6 cents to 13.69. Same time last year was 1,300 cents, so it's actually up a bit on the same time last year. US terms is the one we'll have a bit of a chat around later on if we like, but yeah, certainly in US terms it's sitting at 1,036. It actually went up 4 cents because of the higher currency. Dollar was up and down all over the week. I think it topped out at about sort of 75.80, went through nearly 76 cents. But as of this morning, it's back to 74.80. So a little bit of business in China last night. The offering was a bit over 40,000 bales, and the passing rate was 14%.
Yep, so we've seen a fairly healthy general offering across the board. I think that until this dollar started biting, people were pretty happy with the prices they were getting, I gather.
Yeah, certainly were. So we're looking at a couple of months ago, we had an indicator, an EMI, well over 14.30. I think off the top end, I think it peaked at about 14.60, 14.80. So it's dropped 100 cents Aussie from a couple of months ago, mainly around the dollar. But the one thing I would just keep elaborating on, most of the business in China, our biggest customer, is done in US dollars. So the US dollar price for wool hasn't actually changed too much in the last couple of months. It's just that rising currency that's actually driven down. So it's not a sign of weaker demand. It's just the challenge of actually the US price. It's given us a bit of a challenge.
Yeah, well, we'll talk about export markets in a minute. A bit of chatter in agri-politics about the India trade deal. But first, let's just look quickly across the microns. What are we seeing this week in the markets there?
Yeah, as we mentioned, there's mainly just single-digit changes. So 18 microns was up 3 cents to 21.20. 19 micron indicator was just down to 3 cents to 16.79. 21 micron indicator was up 5 cents to 12.91. The crossbreeds, a bit of a softening tone in the crossbreeds. I think there's a bit of weaker demand approaching in those. The dollar obviously affects it well, but the 26 micron on a nominal basis was down 10 cents to 6.40. 28 micron indicator was up 1 cent to 3.90. 30 micron indicator was down 9 cents to 3.23. And on a percentile, I think the 30 micron indicator, it's in the last 5 years, it's at the lowest price it's been in the last 5 years. A bit of a tough one there for those crossbreed guys.
Yeah.
And the merino carding indicators just lost the 3 cents to 9.56.
Yeah, those crossbreds, I think there were some heady days about a few months ago where you could sell pretty much anything was going very strongly. But as Stephen's been telling us, the logistics started to bite, and now things are getting a little bit challenging.
Yeah, certainly are. Not that we're sort of seeing a lot in our national news, but Shanghai over in China, major port for obviously a lot of imports and a lot of exports for not only wool but all other things, but certainly wool's having its challenges there. So we sell a lot of our wool into the China market, obviously with our mill in Suzhou and our own mill here in Adelaide, plus our greasy side of our business. So we've been really challenged by that. And Steve's probably mentioned it once or twice before, but back pre-COVID, it was 4 weeks you could get wool purchased and beside the ships. This has been stretched out to sort of 2 months now. So you multiply all that cash flow that's been tied up now that used to be 4 weeks to get it onto a boat and get an LC ready for payment. Now it's 6 to 8 weeks just to get it beside the ship. Another month to get to China, and then it gets to China, and it's whether that ship gets unloaded or not is the challenge. So yeah, there's challenges around. It's a little bit in the middle, I suppose, Rick. It's the shipping logistics and the cash flow. The demand's actually not too bad. It's actually the bit in the middle.
Yeah, speaking of that demand, it does look like on the latest figures from AWEX that, in fact, we're sort of diversifying the market already as we sign this new India trade deal.
Yeah, so India's an interesting market. Certainly, low labour costs over there, obviously with China as well. You look back in time now, sort of 4 or 5 years ago, the exports into China were probably up around the high 80s and looking at 90%. As of we're looking at today, it's dropped under 80%. It's back to 78. Still a big number. The next one in line is India. So India's current exports, it's actually up 1% or up to 5%. Was only 4% last year. They're the second biggest export market for us, and 78 to 5. But India's an interesting one. I think it's only positive about the trade deals. I think the tariff into India is 2.5%. So they're looking at winding that back. It's not a big number, but still it's a positive one. And yeah, we do we'd like to do more business in India, and actually I think Steve and one of the trading guys in Melbourne might be heading over to India in a couple of weeks' time, so we might be able to add that to our report in a month's time.
Sounds promising. All right, Andrew, good report first time round. Thanks for joining us from Michell Wool. Much appreciated, and have a great weekend.
Cheers, Ricky. Thanks.